Hello, everyone. It's Modified Darvas Box MDB coming at you with a quick weekend review wrap up here on Saturday. It's a windy and rainy Saturday here in Florida. So before we get into it, for new people who don't know who I am, I'm a regular guy who created an investing system based on this book by Nicholas Darvas. It's a great book. Check it out on Amazon. It's one of the classics out there, and I built a system using it where I look for bullish Darvas box patterns that look sort of like this, and I try to identify them and buy them, and uh, and and I try to avoid or short bearish Darvas box patterns that look like this. I've added other things to it, including a fundamental piece as well. So it's not just drawing lines on the chart, but in a nutshell, that's my system. Um, all right, so the market continues to do really well. It's what I call full bull, and full bull means all three major indexes have broken out of their Darvas boxes and are now in uptrends. Here you got the S&P 500. You can see there's a Darvas box here. It's broken out, and down here, oh, that should be circled. Down here you can see volume, green volume. Big institutions are buying into this rally. They're not sitting there saying this rally, we got to sell out of it. They're saying we got to put money to work. And you can see that. Here's the NASDAQ, full bull. See, breakout and starting to accelerate to the upside. And here's the Russell 2000. And this one was important because the Russell is sectors of the market that didn't do well for a long time, and you really need this index to participate because it represents a lot of stocks out there that are not in the other two indexes. And as you can see here, it broke out of a Darvas box, not but as strongly as the other two indexes, but it's green and it's positive and it's holding above that, which means those sectors are helping to push things along. Why is this happening? I swear to God, people on CNBC drive me bananas. And other commentators, they draw lines and they say this and they say interest rates or whatever. No, they're all wrong. It all comes down to, well, they're not completely wrong, but perhaps those things that they're talking about aren't weighted as important. Yeah, trade wars are important. Yes, interest rates are very important. Yes, the Fed is very important, but earnings are also very important. Here we are currently in the reporting for the latest quarter of the S&P 500 index. The index is 89% reported, which, wow, that was fast. Companies have been reporting fast and furious. And the percentage growth, minus 4% from a year ago. That's just terrible. And that just shows what a mistake that the Federal Reserve made when they raised interest rates too high. That's my professional opinion as to what's going on. But the Fed has been cutting and getting the interest rates back to where they need, thank God. And look at this. The index, people go to work every day. Managers manage their companies every day to make a profit. And growth is on the comeback. And it's just wonderful that things are reaccelerating, and you can see it in the indexes. So fundamentals and charts sometimes go hand in hand, sometimes they don't. When they do go hand in hand, then it's a really good. It can be really powerful. So the last piece about the market, which people are all getting upset about, is valuation. Yeah, valuation's important. I don't think it's bad. But here's the thing. 89% of the S&P 500 companies have reported their earnings. We know about this. So, and the market is forward looking. So, is the market looking at this minus 4% number? No. The market's looking at the future. I put this line here in orange because I do a rough estimate. That's where the market is probably looking, or maybe between somewhere in the zone in the future quarters. And yeah, we may be a little expensive here at 23, which up here in my chart puts it as a strong market. Instead, I put it as more as 18 to 21 because, the future quarters. So that puts us more between average and strong, which I think is a better interpretation of where we're at. So anyways, we're in a full bull market. And so winning stocks are going to be winning and long trades should be doing well. But, the market's a minefield. You got to pick the right stocks. Not everything, it's not a general breakout where every stock goes up and nothing loses. In fact, it's like the opposite. Growth stocks some of them are getting pounded and for very good reasons. But let's talk about some of the winners going on. Apple, clearly this one's driving the indexes. People in their 401ks are fat and happy. My sister's loving it in her 401k. Large cap funds that her Schwab advised her on. She's digging it. Probably lots of people are happy out there. AMD, one of my top picks. AMD broke out a big green volume from its Darvas box, and this box is only over a year long. It first went up, way in advance of this run right here, triggered what I call a volume blowout rule, and then it's taken over a year for it to get its act together and for the numbers to align with the stock and push it higher. But AMD, it's looking brilliant for the future. Keys, this one broke out a couple weeks ago. Not the strongest one, but it's up. So that's in tune. Here's a newer breakout, and this one's biotech, so you always got to be a little careful of it because biotech is risky. But NBIX, look at that, big green volume, Darvas box breakout. I'm not a big fan of Chinese companies. I think there's all sorts of issues around them, but this one, PDD, big breakout from its Darvas box here. Also, it came out of the box here down lower, but then took off. But this one's looking really strong. It does have earnings coming up, so you got to be cautious. Can't pile in the day before. If you lose money, then that's your fault. Qualcomm, beast mode. Look at this. Big green volume, breakout from Darvas box. And what's really cool, if I go to the monthly chart, I remember watching this peak out in 2000. This trading was just absolutely insane. It was crazy. I remember watching it. I didn't own it, but it's only taken 19, 20 years for it to get back to those levels. But hey, looks like it's going to be going higher. Two more on the breakout list here. TDOC. Yeah, you can see it. Same pattern. And, breaks out on and it's got good green volume. And the last one, Tesla. Tesla had the huge Darvas box breakout on their earnings report. And, and it's launched hugely. I have a little note here that says no, simply because, in my opinion, Elon is, quote, controversial. So I've determined that even though I'd like to be buying this, that there's a few too many issues that make me a little uncomfortable. But either way, I'm going to be watching it, and I'll cheerlead others who are in it. So there's a few of the ones that are doing great. Here's the ones which I call baking, where they're in a box and they have not broken out yet. And you can see this list down here on the side of ones. One of them is cost. And you know what's funny? I tweeted that cost was breaking out of its Darvas box, which it did on Thursday. But the market's a funny thing. On Friday, sellers came in and said to the bulls, "What the heck are you doing? Get the hell back in your box." Or maybe it's not time yet or something. So you had one day where you get all excited and geeked out, and then the market has other ideas and says not so fast. So the way I would have played this, if I had bought it, I didn't because I'm just full up, but I would have tried to buy it as close to the top of the box as possible, spent the night all excited, and then I probably would have sold out for a small stop loss. And, at this point, just watch and wait for it to develop again. Another one, which I actually think is beginning to turn around, but it's below its weekly moving average, is LYFT. I don't think LYFT is as bad as everybody says, but, I'm just watching it. I bought a very small, I bought some of it the other day and got spanked at the open, and I decided what the heck am I doing? It's not ready. So I got rid of it. Roku, this one in a box, was doing awesome going into its earnings, but then earnings disappointed. Now it's back below, a smidge below its weekly moving average. I have no here simply because I want it to do better. It's really unknown. Is Roku going to keep going up or not? But it's definitely one to keep an eye on. And now we get to the avoid list. So that's a few here. And it's interesting. Earnings, TTD, they reported earnings. I had the no sign here because I did not want to buy it before earnings, too risky. But it had earnings, had a positive day, but I don't know if it's still. It was, it bears watching, to say the least. So we'll see what happens. But now, as I mentioned, we get into the avoid list. And boy, the avoid list is getting pretty big. Look at the names here on the sides. We're not going to go into all of them, but you can see the pattern is clear. AMT breaks down on volume. APPN. AYX, that one's weakening, but not done yet. But look at BYND, Chewy, CMG, all breaking down on big red volume. ENPH. No, that one's not done yet. ESTC. Etsy. Whoa. This one broke down. Here we go. Hubs. OPRA. PD. Ugh. I think you get the point here. Even PayPal. Look at PayPal. Broke down below its box. Twitter. Ugh. SHAK. Ugh. So you can see a lot of stocks aren't doing well. And you know what? The one thing I want to mention is there's reasons for that. There's reasons for this to occur. And that reason is what many technical traders miss, which is earnings, and earnings growth. So ENPH, this one was looking promising, had earnings, and cratered. Well, I would argue that the reason why it did that is because, like with the S&P 500 earnings, the market is forward-looking. It had this awesome streak of green earnings. Look at this, triple digit. I mean, this is huge. No wonder it had a run where it doubled and tripled. But the good days are going to be coming to an end, and it's going to be slowing down. Does not mean it's a bad company by any means, but it means that investors aren't going to be getting as much in the future as they've gotten in the past. And when I buy a stock and I use this tool, I'm literally answering the question, what if I buy the shares now, what do I get in the future? What am I getting? So ENPH, yeah, that one's slowing down. Unfortunately got hit. Another one in solar, which somebody asked me about, SEDG, same industry, same group, same sort of profile. It's got some good green, but slows down here later on in the future. And, is the future going to be more or less? In this case, it's probably going to be a little less. Doesn't mean it's a bad company, but, this is how the market works. Here's a couple more examples. Etsy. Look at this. Went from good green to good grief. Look at this, red. You're getting your butt kicked if you're a shareholder. What are you getting? It's taking money from you and by being negative. What's going on with Etsy? Yeah, Etsy is matching this growth. Not good. This is why Etsy is on my avoid list. So the point is, there's reasons for everything. Twitter, look at this. Green, red, minus. Ugh. Now, it does begin to pull out later on in the year, so that may have an impact later on. But right now, no thanks. And I'll end this video by wrapping up and showing you the worst of the worst. SHAK. Oh, SHAK. So I like the food at SHAK. I think it's a little overpriced, for regular old burgers and fries. But hey, it's not bad. I'll go. The restaurants are crowded. But the stock ran up with these types of numbers. It reported this 24% number, but then the guidance has been coming in and analyst updates. And by the way, I I purchased this data and I download it into Excel. I've been doing this for 10, 15 years. I've had this spreadsheet for over a decade. And look at this. 24% to minus 117%. Are you kidding me? Look at what the stock is doing. This is the definition of a train wreck. Here, I'll move the box. Train wreck. Do you think this is going to stop going down? Oh, no. This is just beginning, because there's other valuation tools like PE ratio, price to sales ratio. This stock right here at 62 could still be, based on those numbers, over 50% overvalued. You might see this thing down here in the 30s, for Christ's sake. So that's how valuation plays out, and why, Nicholas Darvas was a techno fundamentalist. That's his system of being a techno fundamentalist. I am a techno fundamentalist. I look at the technicals on the chart, and then I also look at the and then the fundamentals here, what's going on. And yeah, this paints a picture that I don't want to have any part of. So hope you enjoyed this video, learned something from it. Have a great weekend. If you have any questions, let me know. Talk to you. Bye.